Somewhere right now, a 19-year-old with $5 and a Robinhood account is building more long-term wealth than someone waiting until they have enough money to invest. And that second person might be you. Welcome, my friend, to the beginning of your financial glow-up. So let me paint you a picture. You are scrolling through social media, and you see someone talking about their investment portfolio. They throw out words like diversification, asset allocation, market volatility. Your eyes glaze over. You close the app and go back to watching dog videos. I get it. I have been there. But here is the truth. Nobody is telling you clearly enough. Investing does not have to be complicated, and it definitely does not have to be expensive. The biggest lie the financial world ever sold us is that the stock market is some exclusive club with a massive entry fee. It is not. And we are proving that today. Let us talk about fractional shares first, because this single concept changed everything for me when I first discovered it. Okay, so imagine your favorite company. Let us say it is Apple. One share of Apple right now might cost you somewhere around $170 or more. If you are living paycheck to paycheck, that feels completely impossible. But here is where fractional shares come in and basically save the day. Instead of buying a whole share, you can buy a tiny slice of that share. You can invest $5 into Apple, $10 into Tesla, even $1 into Amazon. You own a piece of these massive companies proportional to what you put in. Think of it like ordering one slice of pizza instead of the entire pie. You still get the pizza. You still enjoy the pizza. You just did not have to pay for the whole thing up front. Apps like Robinhood, Fidelity, Charles Schwab, and Acorns have made this incredibly accessible. Some of these platforms let you start with literally no minimum balance. Acorn specifically is genius for beginners because it uses this brilliant feature called roundups. Every time you buy something, say your coffee costs $3.50, Acorns rounds that up to $4 and automatically invests that extra 50 cents. You are investing without even thinking about it. You are out here building wealth while buying coffee. That is honestly the energy we need. Now I know what you might be thinking. Okay, cool. But 50 cents here and $5 there, does that actually matter? Is that ever going to grow into anything real? And this is where I need you to lean in, because we are about to talk about the most powerful force in the entire universe of personal finance. Albert Einstein allegedly called it the eighth wonder of the world. And whether he actually said that or not, the concept is absolutely legendary. We are talking about compound interest. Here is how it works in the simplest way possible. You invest money. That money earns returns. Then those returns also earn returns. And then those returns earn returns. It just keeps multiplying on itself, like the world's most enthusiastic snowball rolling down a very long hill. The longer it rolls, the bigger it gets. The key ingredient that makes compound interest absolutely magical is time. Not a huge amount of money. Time. Let me give you a real example to drive this home. If a 22-year-old invests just $50 a month starting today, assuming an average annual return of around 7%, which is a reasonable historical average for index funds, by the time they are 62, they would have accumulated over $130,000 from $50 a month. That is less than $2 a day. Meanwhile, if that same person waits until they are 32 to start, investing the exact same amount every month, they end up with roughly $65,000 by 62. Same investment amount, just 10 years later, and they lose almost half the outcome. That gap is not because of how much money they invested. It is purely because of time. This is why starting small and starting now completely destroys waiting until you have more money. Every single day you wait is a day your money is not out there working for you. Your money can literally be working while you sleep, while you binge your favorite show, while you do absolutely nothing. That is the deal. Take it. Now I want to address the fear piece, because I know investing feels scary, especially when you are just starting. What if the market crashes? What if I lose money? These are completely valid concerns, and I am not going to brush them off. Yes, markets go up and down. That is just reality. But here is what history consistently shows us. The stock market, over long periods of time, has trended upward. Downturns happen, but patient investors who stay in the game have historically been rewarded. The biggest financial risk for most beginners is not investing at all. So here is your beginner game plan, nice and simple. Step 1. Download one of the apps we mentioned. Acorns for the completely hands-off approach, or Fidelity and Schwab if you want a little more control with zero account minimums. Step 2. Start with whatever you can. $5, $10, even $1. Seriously. The amount matters way less than the habit. Step 3. Set it up on autopilot. Automate a small recurring investment weekly or monthly so you do not have to think about it. Step 4. Leave it alone and let time do its thing. You are not trying to get rich overnight. You are building something real, something steady, something that future you is going to be incredibly grateful for. And you started with practically nothing. That is not small. That is actually huge. The best time to start investing was 10 years ago. The second best time is right now, today, while you are watching this video. So go do it. Go be that person who started. I am rooting for every single one of you.